Welcome to We're the Brits in America, a Plan First Wealth podcast dedicated to helping ambitious expatriates and first-generation immigrants thrive in America. I'm your host, Richard Taylor, and Plan First Wealth is the business I founded and run today, and we work with successful expatriates, immigrants, and internationally minded Americans living across the US to make the most of their opportunity and avoid the expat landmines. We're the Brits in America consists of 3 show formats. We have Ask an Expert, where I invite in a fellow professional to share useful and important information that expats and immigrants need to know. Always an Expat, where I invite in a fellow expat/immigrant with an interesting story to tell. And From the Trenches, where myself and my colleague James Boyle bring you behind the scenes at Plan First Wealth, and we share with you what we're working on, seeing, and doing as we build this business. But first, a quick disclaimer. While Plan First Wealth LLC is an SEC-registered investment advisor, the views and opinions expressed in this program are those of the speakers and do not necessarily reflect the views or positions of Plan First Wealth. Information presented is for educational purposes only. Now, if you aren't already receiving our regular emails, please go to our website, www.planfirstwealth.com, and sign up there. It's free, and you'll then be notified every time we drop a new episode and so much more. Okay, let's get back to this week's show. Welcome to our Ask an Expert show, where I invite a fellow professional in the cross-border space to come in and talk to me about the issues we think expats and immigrants in America need to be aware of if they are going to thrive here. My guest today is the returning champ, Virginia La Torre Jeker. For those of you who still don't know, Virginia is a US international tax attorney, a member of the New York Bar since 1984, and admitted to practice before the US tax court. And she has oodles of experience dealing with all aspects of international tax and cross-border transactions. Now, if you haven't already listened to it, you can go back and listen to our first podcast together. That's episode 37, where we explored how taxpayers can assert reasonable cause to try and have IRS penalties abated. TLDR, it's not as easy as you think it is. And Virginia has very kindly agreed to come back on today and talk about exiting the US, especially for those on a green card. As ever, this is way more complicated and involved than people realise, with serious, really serious potential consequences, or as I like to call them, landmines, for some people if this is mismanaged. So if you're on a green card and think you may one day leave the US, or if you're a US citizen and you think you may one day leave, buckle up because you're in for a bumpy ride. So without further ado, let's get into this. Hi, Virginia. Welcome back to We're the Brits in America podcast.
Thanks, Richard. It's great to be back. I always enjoy our talks.
Likewise, our last one was great, and I'm thrilled you've agreed to come back on, and I hope it's the second of many more. So, as I didn't reference it in the intro there, but for those of you who still don't know, Virginia has a fantastic US international tax blog that everyone who operates in this niche is aware of and follows avidly, and there is a wealth of topics on there for us to get into. www.us-tax.org
www.us- which is a little dash, tax.org, O-R-G, that's correct. And I was just speaking to someone literally the past half hour ago who told me that he started reading my tax blog in 2012 when he was in law school, and he's been following it ever since. That really made me happy.
I'm sure. Yeah, no, I won't rehash everything I said in the first podcast. And for anyone who wants a full, my intro and then Virginia explaining her background and experience, you go back to episode 37 and have a full listen. But go and check out this tax blog. They're digestible. And if you want to go more into things, they're full of links to other blogs and external sites. So if you can go as deep or as surface level as you want, and I include the layperson in this. Although it's a motivated layperson who wades through US tax law. I'll say that.
I agree. I think that's a good way to put it. A lot of lay people who read it have said to me that they understood what I was talking about. And for me, that's the greatest compliment, because US tax is so highly complex, and so many of the things you read, you just don't understand them. And hopefully my blog does achieve this digestibility, readability for the average person who's trying to learn. But yet it's not sugar-coated. It's not leaving out the important details. We've got plenty of hyperlinks if you need to dig further. So I think that's very important when people choose a source of information.
Agreed. So if you're an expat, an immigrant in America, you want to thrive here, check out this blog, check out our past podcast 37, and let's get into this one. So we are here to talk about leaving the US, which, for people who listen to this podcast, it's all about helping expats and immigrants thrive in America. So they might be thinking, well, why are you talking about leaving America? If you want us to thrive here, if we're leaving, what does it matter? Well, as we'll get into in a second, you can do great work in America. You can do great things for yourself and your family. And if you mismanage your exit, you can wreck it pretty quickly. So where should we start?
Well, let's talk about what do we mean by expatriation, people giving up their U.S. status, because we have U.S. citizens who are giving up citizenship. And I'm guessing most of your audience is not really in that category. Your category will probably be, gee, I've been in the US, I've been on my visa, I love it here, we want to get a green card, we got a green card. And they're not even really thinking about leaving the US maybe at this point. But they need to understand what's down the road for them if they do decide to give up the green card and return to the UK or move to another country. We don't know. So many people are under the misimpression that because their green card has expired from a U.S. tax perspective, that they are, from an immigration perspective, they believe that it's also finished from a U.S. tax point of view. And that's not the case at all. So even if your green card has expired, you still are responsible to file tax returns and pay taxes on your worldwide income unless you properly relinquish that green card. So we can talk about, what does it mean to properly relinquish it? Typically, the person will be voluntarily giving up the green card, and he needs to complete a form I-407 to do that. And in the old days, pre-COVID, you could actually go to a consulate or an embassy outside of the U.S. and hand that I-407 form with your green card in at the consulate. You would get a stamped receipt back. So you knew you had proof that you now had given up the green card. Since COVID days, they're only accepting it by mail or courier. And people have to be very careful with that because you have issues of, when did I officially give up the green card? Is it when I put it in the registered mail and got my registered mail receipt, certified mail? When? If I give it to a courier, is that going to work the same way that it's when I get that receipt back? So there's a little bit of thorny issues that go on with giving up that green card officially. Now,
is there any law or precedence on that? Is there an agreed upon date?
Well, Richard, of course, you've been dealing with me and U.S. tax for a while. We do have regulations, but the regulations are very old. And what it talks about is, when you abandon it, giving it up by certified mail or giving a letter or giving it up at the consulate, and you're like, well, this doesn't exactly fit in. Maybe my country doesn't have a certified mail that's the equivalent of what the U.S. has. So what do I do? You do have a regulation, but there's things that kind of slip in between the cracks. So you have to get the best advice depending on where you are giving it up. If you can actually go to the consulate or the embassy and say, I have to give it up here because I need to as well apply for a visa, maybe at the consulate, they may accept it.
Can you give up your green card before you actually exit the US? So if I know I'm leaving next month, can I send off the I-407 before I leave?
No, because then you're going to be in the U.S. illegally.
Okay, of course, yeah, right.
So that's why outside of the U.S. is where you have to give it up.
Just to put this into some real life context for people, and I've had this conversation a month ago with someone, so this is happening all the time. I have had so many conversations where we've had a client or a prospective client say, "Yeah, my green card. I'm just gonna go back to the UK and I'll keep it in a drawer, and eventually it'll expire." And they don't realise that without going through this formal process, even if they are not living in the US, unless they've formally given up their green card, they are still supposed to be filing US tax returns and paying, if any are due, US taxes. And by not doing, they're in non-compliance. And then, I mean, there's financial repercussions to that potentially. There's probably future entry into the US repercussions to that. I shudder to think how many expired green cards are sat in drawers around the world right now with people who have not given up their US permanent resident status.
I know. What those people need to do, because we see them a lot, what those people need to do is, not only are they having this continued problem of US tax liability, but they are having as well continued time that they're holding the green card. And if they reach what's called 8 tax years holding that green card, that counts, right? In the drawer, it counts as holding the green card for 8 tax years. Then they have the possibility of being this horrible creature called a covered expatriate when they do give up the green card. So that's a big problem. It's not only the continuing tax liability, but they are increasing their time as being treated as holding the card to reach that 8-year threshold, which is,
Yikes.
as you know, big trouble.
That had not occurred to me. So I tell you what, that's a perfect segue. Let's introduce covered expats to people.
Right. Okay. So a covered expatriate is someone who has either given up his U.S. citizenship or given up a green card that's been held for a significant amount of time, specifically 8 tax years out of the past 15 years. And I just want to say that 8 tax years can be reached very quickly. So if you get your green card on December 28th and you think, well, that doesn't count because I haven't held it a year yet, that counts as a full tax year, December 28th through December 31. And then you get into the next tax year, January 1 through December 31. So the year you get your green card and the year you give it up are 2 separate tax years. So you only need like 6 years in the middle, and that's very easy to reach for, I'm sure, many of the people that you are dealing with. You know, right. So not everyone who gives up their citizenship or gives up the long-term residency will be treated as a covered expatriate. If they meet any one of 3 tests, then this taint of being a covered expatriate will hit them. And let's go through what those 3 tests are. Again, you only need to meet 1. So if on the expatriation date you have a net worth of $2 million or more, you will be a covered expatriate. Net worth means your worldwide assets minus your worldwide liabilities. That's what net worth means. And they take the fair market value of your assets. So you may be thinking, oh, when I bought my apartment in New York, it wasn't that expensive. It's worth so much more now, but I used the lower. No, fair market value as of the expatriation date is what you look at. So that's the first test. The other test is they look at the past 5 years of your tax liabilities. So what were you paying in tax over each of those 5 years? And you add those numbers up and divide by 5 to get the average amount of income tax that you were paying. And if that average comes over, let's see, we have it indexed for inflation, and the number for 2025 is $206,000. So if your average income tax being paid over the past 5 years comes up to that threshold of $206,000, then you're a covered expatriate. The other test, which is one that hangs people up quite often, is that you cannot certify, you don't certify under penalties of perjury, that you've been fully tax compliant for the 5 years before you've expatriated. And this is where the person who's kept the green card in the drawer has the problem, because he may have thought, I don't need to file, I'm gone, I'm back in the UK or I'm wherever, and my green card has expired 5 years ago, 10 years ago. I don't need to do anything. Not true. You are still on the hook for the taxes and the filing. So what those people need to do is clearly get very good tax advice, see if they can join a program where they can file the late returns without penalties. The IRS does have streamlined programs that might work for them. The issue there is you are only technically filing 3 years of back returns, 3 years of late returns under those streamlined programs. The person who's expatriating needs 5 years of tax compliance. I've successfully gotten 5 years through without any issue. But you always want to check with the IRS. Are you still accepting 5 years? And they're typically not answering the phone or not getting back to you on that. So it's up to the client, to understand the risks. Do they want to take that chance and submit 5 years in and hope that they won't have any problems? But they do need to get that fixed up.
Wow. So the one that we see will catch most people out here is the $2 million. Now that can be split between husband and wife, right? And so it's $2 million each.
Each person is entitled to the $2 million. But if the husband, let's say, has $3 million worth of stuff and the wife doesn't have anything and they're both expatriating, they can't say, well, it's 1.5 each and we're fine. No, it's per person. And one of the issues that often comes up is people believe because they own the asset, it's only in their name. They think, well, I own it, it's mine. I have to deal with putting that in my net worth calculation. But a lot of times, unbeknownst to them, they may have community property issues. And they only own 50%. The other person owns 50%. And this issue of community property can get very, very tricky because if someone has lived in a community property jurisdiction, many countries have community property rules and they're all different. They may be applying for the time that the person lived there, those community property rules. So you're going to need local counsel to get advice about ownership of assets sometimes if you've been, in a complicated situation jurisdictionally.
The plot thickens as ever.
The plot thickens, as it always does.
I'm thinking two things. I'm thinking the people we deal with here, and I think what catches them out the most is the $2 million. You come to America, the people we see, you come because you've had a great opportunity, a great job offer. You come to America, you get paid more, you save more, you build more in your retirement accounts. People who are deciding to go back to the UK or elsewhere to retire, generally, fingers crossed, have got more than $2 million. That's a net worth. That's a good thing, but it could cause complications. The one I hadn't truly, and the one about having to certify 5 years, that really becomes a trap for the people who wouldn't be covered expats, who don't have the 2 million, but who maybe have missed out on informational reporting, haven't had a cross-border tax advisor, because your tax returns could arguably be considered incomplete, in which case you can't or you shouldn't sign that under
You're
penalty
not
of
fully
perjury.
tax compliant if you're missing out on those, absolutely. And your entire statute of limitations for the entire return is still open.
Yeah. And
Which is
then
the other
we've got the people who have, and this had never occurred to me, the people who have left, who have not given up their green card, and who, because by definition aren't in tax compliance because they weren't aware they were meant to be filing tax returns and if any were applicable, paying US taxes. So if their asset base has been growing in that time, maybe they've crossed that 2 million barrier.
Yes.
And as we're about to talk about, this is a problem. So let's talk about the consequences of being a covered expat.
Okay. Now, just so people don't lose hope, because remember, Richard, our motto, hope springs eternal.
Hope springs eternal. I
It
remember
really
it well.
does. There are planning techniques. So for the guy that's over $2 million, maybe we can use a gifting plan he can gift certain things away to get himself under the 2 million, okay? But they've got to be bona fide gifts. But one thing I want to point out, this is new. Expatriation is clearly in the IRS radar. First of all, starting in 2019, they had what's called the campaign for expatriations. A campaign in the IRS means they need to use their resources very carefully. And so they are looking at what areas can we get the most tax dollars and the most penalties from, because that's where we're going to put our resources. And we will call these areas campaigns, and expatriation has been a campaign item. So they are looking more closely at people who are expatriating and checking, auditing them more frequently. So that's one thing. The other thing, when we talk about the possibility of gifting, the latest IRS form for when after you've expatriated, you need to fill out a form called Form 8854, which essentially tells the IRS, yes, I've been fully tax compliant. You have to check a box. For the past 5 years, I don't have a $2 million net worth, and I didn't meet that threshold of income tax liability over the past 5 years. So this Form 8854 has been around for a very long time. But if you look at the latest one, there's a brand new question on the form. And the question is whether your financial situation, assets or liabilities, has changed significantly in the 5-year period prior to expatriation. And when you look at what does that mean, what do they mean by this question, has it, changed significantly? And you look at the instructions, they say, if you had a net worth over $2 million at any time in this 5-year period, but on your expatriation date you are under $2 million, that is a significant change. Please explain. So this is brand new. And this tells me IRS is really looking, and we may have challenges to our gifting planning.
Oh, wow.
We may. I don't know. I'm just pointing it out as this is new, and this tells us something. Every time the IRS comes up with something new, you have to think of why. Why are they doing this?
Even if you can't avoid being a covered expat, you can avoid the worst consequences of not knowing you're a covered expat and then suffering the consequences by out of the blue, but at surprise, say when you're trying to come back into the US when you can't do anything about it. That was news to me as well. But this is
yes,
if you
it's been
do
news.
not leave,
I think a lot of people don't even realize it yet. But I'm always checking the draft forms, and it was on the draft form. So now I don't know if they have finalized this form, but I'm sure that question's not going away.
do not leave the US without consulting professionals.
You've got to get the right advice. Yeah. You absolutely have to get the right advice. So to just recap, so we were looking at the covered expat status can occur with one of 3 tests. 1 is the net worth, 2 is the income tax liability. If your income tax liability exceeds that threshold, there's no planning you can do to get rid of that, because your tax liability is what it is, unless some big error was made in your tax returns and you should have been paying way less tax and you want to amend. That's a different story. But typically, if your tax returns have been done correctly and you're above that threshold for income tax liability, you can't change that, okay? So then you have to wait until maybe you had a loss year and you recalculate and maybe you're below the threshold. It might delay your expatriation unless you say, well, I'm a covered expat and I'll live with the consequences, which we will discuss. And meeting the full tax compliance for 5 years prior, as I said, hope springs eternal. The IRS has programs. Get a good tax advisor, get it fixed, and exit cleanly. So what happens if you're a covered expat? Let's talk about that. If you're a covered expat, they want to punish you, and not only you, but people that you love. They have something called an exit tax. It's this mark-to-market regime where the covered expatriate is treated as if he's sold all of his assets worldwide. Everything he owns in the world is treated as sold, and he has to pay tax on this pretend gain that he's earned. And most of the time it will be capital gain. So depending how long the asset's been held, it may be long-term capital gain, which is taxed at a favorable rate. But you may already know, Richard, about the net investment income tax.
Yeah.
the 3.8%, that will also apply on top of the exit tax, assuming you meet the net investment income tax threshold, which most covered expat probably would. So you're talking about, almost a 24% tax on this pretend gain. You don't have the proceeds from any sale, so you may not have cash to pay this tax. That's a problem. And then you have to consider not everything you have is treated as sold. So there's certain assets that will give you bigger headaches, for example. So if you have specified tax deferred accounts like an IRA or a Coverdell, those are treated as if it's the full amount is distributed out to you.
So I've got $1 million in an IRA. I leave. I expatriate. I'm a covered expat. They're going to say, "Oh, we've just we haven't," but essentially, we're going to treat it like you've just received $1 million of IRA income.
That's right.
Taxable at the highest rate, which is like 37% right now. Right? I know
It depends
crazy.
where you are.
Yeah, but essentially,
yes,
gone.
The good thing is you won't have the early distribution penalty applied to you.
Okay. Well, so I can access it at least.
Be grateful for small things.
So at least I can access my IRA to pay it.
Yes.
I've also got, let's say I've got a $5 million real estate. I haven't sold that real estate, and I'm going to have to pay 25%, 24% on the gain. Hopefully I have that in cash. Otherwise, you better have to sell it. But at least with the IRA, you're going to get up to 37%. But at least I can surrender my IRA without paying the early surrender penalty. Okay.
That's actually a good question. So if you're treated as selling it, getting the distribution, then you don't get the early distribution penalty. But I think if you actually take the money, you may have that early distribution penalty.
Oh, okay.
Yes, because the early distribution penalty does not apply if it's deemed distributed to you. But that's, separate under the exit tax regime that they're giving you this benefit. But if you actually take it and you're under the age, then you can have the early distribution penalty. So that's not fun. Let's move on to another asset that's very troublesome, and that's the pension plan. So if you have a U.S. pension plan, because a lot of people may have those once they've been here, a U.S. pension plan, that will be with a U.S. administrator, and they will permit you to called pay as you go if you're a covered expat. If you file the proper paperwork with the U.S. administrator and tell them, hey, I'm a covered expat, here's this form W8CE, I've got to tell you to withhold 30% of whatever you're going to pay out to me. So you will, as a covered expat, be punished and always have to pay 30% tax on the distribution from that U.S. pension plan, provided you've sent the U.S. administrator the proper documents, etc. If you have a foreign pension plan, that will not work for you. You are deemed to have received the full value of your foreign pension plan, and you have to pay tax on that as if you got it. So, they're going to look at valuation principles maybe under actuarial tables or depending on the terms of the plan, what it says. But you're going to be deemed to have some present value and paid out to you, and you will have to pay tax because you'll be forced to include that amount in your income. Well, you're not going to have the cash for that.
And you simply cannot access some of these before a certain age.
Correct.
No penalty, no nothing.
Correct.
You're just not getting the money.
I know. And I don't know what happens. Of course, it depends on the terms of the plan. But let's just say you're a covered expat and they figure out the actuarial value and you have to include $1 million in your income and pay the exit tax on that. It's going to be taxed at the 37%, assuming you're up there, which you will be. So what happens if 2 years later, God forbid, you passed away, what happens to the pension? Like, does your estate get it? Do you completely lose it? It's going to depend on what the plan says. But it's too late. You've already paid.
If you're going through this and you're subject to the exit tax, have you, by definition, already left the US?
Well, if you're giving up your green card, yes, you'll be out of the US, you'll have surrendered the green card abroad, and that will be your expatriation date, okay? If you're a citizen and you've given up your citizenship, for sure you'll be out of the US. Physically, you will be out.
Virginia, what we're referring to here is a phantom tax, right? So no assets are sold. It's a paper exercise that mark to market that hurts you an awful lot. But you're deemed to have sold your real estate. You're deemed to have liquidated your pensions, even though you haven't, even if you can't access them. Now, at this point, you've left the US. You're probably a tax resident of another country.
That's right.
So you're in the UK, and you haven't sold any of these assets. You haven't done any prior planning. You haven't been able to access them. You get hit with a 24% tax upon exit, a phantom tax for the capital gains. You get hit with up to 37% on the deemed distribution of your retirement accounts. But all those accounts remain intact because you can't access them and you haven't sold the property.
Correct.
5 years, 10 years, whatever it is, down the line, as a resident of the UK or wherever, Canada, wherever, you decide to access your pension, you decide to sell your property, you're going to pay local tax. So you're going to pay UK capital gains tax on the sale of that property. You're going to pay Canadian capital gains tax on the sale of that property. You're going to pay UK income tax on your pension distributions and your retirement account distributions up to 45%. And because the US exit tax was a phantom tax, am I right in thinking you're not going to get any relief under the treaty for that, as far as I'm aware?
Correct. As far as I'm aware, you get nothing.
This means like distributions on pensions are going to get effectively taxed at like 70-80%.
It's horrible. Foreign pensions, that's why they're called the spawn of Satan. I mean, they're really bad news.
Do you think my logic follows there? Is that I've arrived at a place where...
No, you've got it right.
Oh
Unfortunately, you have it right. So what people need to do really is see what kind of planning is possible to at least try and make me not a covered expat. Okay, because then you avoid all of these problems. All right. And many times with proper planning, you can escape that. But if you don't do any planning, forget about it. It's very easy to get to a $2 million net worth.
Virginia, what if I'm one of those people who listens to this and thinks I've got a green card sat in the car in the drawer, I'm worth over $2 million, I've got retirement accounts, I've left, I can't do any planning. You can come into compliance, but is there a way you're still going to be subject to the exit tax?
Well, coming into compliance, you can still do planning because you haven't officially given up the green card.
Okay.
Okay, you've left, but as far as the U.S. is concerned, you're still on the tax hook. So you can come into compliance and in the meantime be doing the planning.
Okay.
Yes, it's not because you physically left that you're in trouble.
Okay. Oh, okay. That's
now where you might have a problem, and this is an important point for those people that have it in the drawer. Let's say they need to come back to the U.S. They're going to have a business meeting or something, a wedding, whatever it is. Oh, great! I still have my green card. Maybe I can get in. And the green card, they're looking at it when you come in, and they say, "Wait a minute, this is expired," or "You haven't been here, even though, it hasn't technically expired. You haven't been here because we see in our records you haven't come for 3 years or 5 years or whatever it is." And they argue with you and say you are no longer entitled to the green card. So they want to take it from you at the airport. What do we do when they want to take it from you at the airport and they sound very threatening and overbearing? Most people cave into that. And it's like, okay, what do you want me to do? And they say, well, here's this form I-407. Just sign this saying you're voluntarily giving up your green card, and no problems, we'll let you in as a visitor or whatever. They make it sound rosy and nice. So the people sign the I-407 at the border, at the airport, and give up the green card. Well, now they've expatriated from a tax perspective.
Done. Over.
So
no
you
planning.
have to be,
That's your date.
Yeah.
Or the date before. Done.
That's
and
it.
Consequences be damned. You just got to deal with them. Yikes.
So the person that's in that position, first of all, he shouldn't be going to the U.S. without understanding he has this potential problem. But if it happens, don't sign at the border and say, I'm entitled to a hearing before an administrative law judge to determine if I have given up or not. And they will set a date for the hearing. And then that person can at least contact me or some tax advisor and get help to come into compliance, to fix their mess, to get under the 2 million net worth, whatever it is, to try and mitigate. Because when he goes before the administrative law judge, they may say, oh, you know what? You did give up. You've abandoned it. So when they sign the order that he's, administratively determined to have given up the green card.
And that's your if a judge stamps that on that date, that becomes your expatriation date. But you have a window between not signing at the border and that judge determining. You have a window to take some sort of preventative
action, something.
But if you take that action, if you get to the border, this happens to you, and you refuse to sign, am I right in thinking you're not getting into the US at that point? They're turning you around and putting you on a plane back home.
No, not necessarily. There's different scenarios that can happen. So, for example, if the person, it depends so much on the person's case. If the individual has gone overseas and has what's called a reentry permit, you may have heard of those. Yep. So when people have a green card and they get a job working abroad, let's say the U.S. employer says, hey, we want to send you to,
South Africa.
Mexico.
Had a client who recently,
for a couple of
South Africa. Let's do that.
Something. And so he says, okay, no problem. And he says, but, I have my green card. I want to make sure I'm not going to lose it when I'm trying to come back. Then you get what's called a reentry permit. And I believe under the reentry permit, you are allowed to be outside of the U.S. for 2 years. So if you have a reentry permit, even if that's expired, you've at least done something to show the border control and say, I had a reentry permit. Oh, yeah, I realize it's expired, but, my job extended longer than they thought. And, the guys may be like, oh, well, okay, you better watch out next time. You better get another reentry permit or you better get it together. So depending what you've got, if you can say, look, I've always been filing my U.S. tax returns. I've not abandoned my residency. I've been filing as a U.S. person. Whatever you can say, I have a lease on my apartment in New York. It's still valid. If you have various points that can show you have maintained your residency, even if it's not perfect, you may get in just from that, having something, having a little file folder with whatever evidence you can pull together to say, I haven't given up my U.S. residency. That will be helpful to you. They may let you in under what's called a conditional stay or something. There's different scenarios. I'm not an immigration lawyer, but I have read up on this a little bit and had a little bit of experience with it, where it doesn't mean just because you won't sign that you're going to be put back on the plane.
Okay. But wow, that you just need to not sign that I-407, and I can totally imagine the situation. You're blindsided by this at the border. You've got no idea. Or you're told sign
Correct.
this, and you can go in, and unwittingly, you've unleashed.
That's the problem.
Oh, you've wrecked. The consequences of that don't bear thinking about. Double taxation without relief. Oh.
Yes, it's a very scary thing. The other area where people really have to look out, so if they're working overseas, like the green card holder who's abroad, he may be, let's take the guy in the UK. And he says, you know what? I know there's something called a treaty tiebreaker, that if I say if I'm a resident of both countries under the treaty, and I use the treaty tiebreaker because I have closer connections under the treaty rules to the UK, then I'm not going to be treated as a US resident, even though I have the green card and I don't have to pay tax. So people have to be careful with this, because if they have held the green card for the 8 years that 8 tax years we've talked about, and they do the treaty tiebreaker, that's an expatriation. Now that only applies, using the treaty tiebreaker, that only applies if you've already had the card for the 8 tax years. If you haven't, let's say, you've had it 2 tax years, and then you go to work, for example, you go in the UK and you want to use that treaty tiebreaker, that will not be an expatriation for tax purposes. But the thing with the UK, it's got a very, very interesting treaty tiebreaker. Most countries say the treaty tiebreaker, if you look, it's in Article 4 of the treaties. So if you look at the treaty tiebreaker, you need to be a resident of both countries in order to use the treaty tiebreaker. And you need to be a resident of both countries under the treaty. So what most treaties say is, if you are treated as a tax resident of the country, then you're treated as a resident for purposes of the treaty. The UK treaty doesn't say that. The UK treaty says if to be treated as a US tax resident, like holding the green card isn't enough, you also have to have had substantial presence in the United States, or you have to have a permanent place of abode. They're using different wording than just the fact that because you hold a green card, you're treated as a US tax resident. That's not enough for the UK tax treaty. So to use the UK treaty tiebreaker is more difficult than other countries, is what I'm trying to tell you. So your guys need to pay particular attention to that.
Virginia, am I right in thinking sometimes if people are sat in the US listening to this and they've thought, I'm just going to leave on a green card and give it up, but now we're making them aware that it's not that simple, and especially if they're a covered expat, is sometimes the best planning they can do is applying for US citizenship and just dealing with the lifelong tax tie to the US and tax returns and all the troubles that come from that are lesser than the one-time seismic event of being a covered. Well, actually, we'll talk about the transfer tax. There are lifetime consequences, but sometimes
yes, we didn't get to that yet.
So sometimes is it just, dude, you've got to take US citizenship. I'm sorry.
They don't even need to go that far. Okay, so if you are domiciled in the United States from an estate and gift tax perspective, like your domicile is there, then you will be treated the same as a U.S. citizen. You know already from having the green card, you're treated the same as a U.S. citizen from an income tax perspective. But we also have to look at gift and estate tax rules, okay? And if you're domiciled in the States, because you're really there and you have all these connections and that's where you live and your family's there, and so many people have children born in the US, like a lot of your people. They come as young married couple, they have children born in the States, those kids are now US citizens. They have to take into account, what's best for my planning, taking into account my entire family situation, because as you mentioned, Richard, not only do we have the mark-to-market regime and the possibility of the pensions, foreign pensions being taxed so horrifically under the exit tax regime, we also have something called this transfer tax problem. So if you are a covered expatriate and you give a gift or you leave an inheritance to a U.S. person, that U.S. person has to pay whatever the highest gift and estate tax rate is at the time they get it, the gift or the bequest from the covered expat. They have to pay the IRS 40% currently, that's the current rate, of the value of a gift or inheritance that they've gotten from a covered expat. So you have to look, if I'm going to be a covered expat and I can't get out, you've had guidance and you're stuck for whatever reasons, and you've got foreign pensions that you're worried about, and you have U.S. family members, then, maybe the best thing is to stay put and say, well, I won't give up. I'll just stay put. And
let me just bring that to life for people. So you've come to the US, you've done well, you've had kids, you've built up a sizable estate. You want to go back and live in Europe or wherever it may be, and you leave the US, you expatriate, you're a covered expat. You sort all that stuff out. You think you've made a clean break. I mean, you have legally, but there's a long tail to this. You're now living it up in Portugal.
So you're a covered expat, though.
You're living it up in Portugal. You're having a great life, and you've got more money than you're going to spend because your US dollars go so far in Portugal. And you want to start giving your US kids who are getting started in America, which is much more expensive, you want to start helping them out. You want to help them buy houses. You want to help them start businesses, whatever it might be. And you want to give them $1 million each. You give them $1 million.
They'll have to pay $400,000 to the IRS.
They have to pay $400,000 straight up to the IRS. Not you, and it's their responsibility.
No, and the reason it's not you is because now you've expatriated. So the IRS, the U.S. government, no longer has jurisdiction over you. Okay? But they still have jurisdiction over the U.S. recipient. That's why this covered gift and bequest transfer tax applies only to U.S. recipients of gifts or bequests from covered expats, because the government has jurisdiction over those U.S. people, makes them pay.
And what about...
So they get, punished.
And what about if you came to the U.S. and you left, and you weren't a covered expat at the time? You were under that 2 million ban or whatever, and then you've made your money in Europe or Canada or wherever it might be.
Well, you weren't a covered expat, full stop.
You weren't, but as I understand it, it's on your kids to prove it. And if they can't prove it...
Yes, we've got a problem with that. You might know, I don't know if you read my latest tax blog, but the IRS just issued... Good for you.
Of course.
The IRS just issued regulations 6 days ago. They were issued January 10th. They're 129 pages long. Okay, so I'm weeding my way through those, but I've already got a lot of questions. It's up to the U.S. recipient to know whether the person they got the gift or inheritance from is a covered expat, and it's up to them to know if the gift is a covered gift or a covered bequest. So the onus is on that U.S. recipient. Now, the IRS has said, and the IRS can help you make that determination. We can send you maybe tax records to help you make that determination. If the donor of the gift is a living person and they refuse to give consent to the IRS to give you those documents, then there is a rebuttable presumption that this gift they gave you is a covered gift. And you're going to have a really hard time rebutting that presumption. So here's a point I want to raise. When I've dealt with people expatriating, green card or citizenship, I always say to them, okay, we've got our 5 years of tax compliance, we're good. You've expatriated, you're not a covered expat, wonderful. Let's get all of your tax returns and all of your transcripts from the IRS, because it'll have their stamp on it, that this was the one Mr. X submitted, and this is what we have in our possession. So now we have a full dossier of proof of tax returns. He never, was non-tax compliant. He never had the income tax threshold. He filed his Form 8854, said, I'm not a covered expat. I've met all my tax obligations. You have everything signed, sealed, and delivered from the IRS. Well, a lot of times when I've tried to get that stuff, they say they don't have the records.
Of course they do.
Okay? So That's a problem. Or they'll say, we can send you the transcript, we don't have the tax returns. I vaguely remember reading somewhere after 7 years they destroy stuff.
Wait, so if they have the transcript, the transcript's not enough. You need the actual stamped return.
The transcript just gives you like a summary. It's better than nothing. It's better than nothing. At least, hey, he's filed a tax return. Hey, it's got what his tax liability was for that year. So, he never overstepped the threshold on the income tax liability test. He filed a Form 8854. Hopefully that's going to be reflected on a transcript. But the point I'm trying to make is it's not that easy to get the records. And if you're talking years later when somebody dies,
forget it.
And you haven't figured this out well beforehand, you think you're going to get that stuff? You're not going to get that stuff. So I tell people you've got to have all of these important tax documents with your will. You've got to tell your lawyer who's handling family matters. You've got to talk to the kids. You've got to talk to everybody so people understand the consequences of Section 2801.
Most people don't, though, do they?
They don't. And advisors, I'm sorry to say, are not giving them the full advice that they need. It's like, yeah, we helped them expatriate. We're done. Done deal. Not in my book.
Part of that is professionals don't understand maybe the ramifications and the long tail. And then, frankly, if I'm honest, some of that is just people don't want to pay professional fees.
I know. We've gone through this, Richard. They really don't. But you know what? You pay peanuts, you're going to get monkeys. Yeah. And you're going to pay the price at the end of the day.
It's better to prepare than to repair. That's what I always say, which is not my line, but it's such a great line. And you don't, and someone's going to pay. When the US is concerned, ultimately someone will pay. It's you a bit now, or it's you or your heirs a lot more later. And it's not just the financial cost. The financial cost, though, is significant. It is the emotional turmoil. There's the emotional turmoil of just going through anything like this, and there's the emotional going up against the US government in whatever form is just particularly scary. And anything else we should talk about with the exit and covered expat transfer tax?
I think we've basically covered everything. So just like to give it a big nutshell summary. You've got to look out for a few things when you are coming up. If you hold a green card, start looking now and say, do I really want this? Do I need this? Because I'm coming up on the 8 tax years. So let me decide what to do here. I've come across a lot of people that, oh, well, it's so nice I have my green card. I can get to the U.S. without applying for a visa, without worrying about. They are just clueless as to what this means. Yep. So people have to really consider. And I have a nice article on Forbes on this topic. Do you really want to get or keep your green card? So that's one thing. Because once you've hit the 8 tax years, which we know can be easily achieved because the day you get that green card, even if it's, middle of December, it counts as a full tax year. And you give it up January 2, that counts as a full tax year. So you're going to easily come up to the 8 tax years sooner than you think. So once you've got there, you've got to say, well, am I a covered expat? Is my net worth $2 million or more? Is my income tax liability average over the past 5 years meeting this threshold? Have I been fully tax compliant for the 5 tax years before? And if you say, I don't have a $2 million net worth, or I've done gifting, so I know I'm not worried about it, and they're bona fide gifts, so the IRS really can't challenge me, and so forth and so on, that you feel comfortable with that, then you've got to look at your tax compliance. Don't go to your $400 1040 tax return preparer for this. Spend the money and say, let me get all my returns reviewed by someone who's in the know, and they will talk to me, because just looking at a piece of paper to say, yeah, I reviewed his returns, they look fine. That's not what it's all about. It's like, I have to talk to you and ask you questions. Have you made gifts to anybody past, $18,000 a year or $19,000? Did you file a gift tax return? Do you have foreign life insurance? Because there's special rules about paying foreign life insurance premiums. You might not be fully tax compliant even though you think you are. So get the returns reviewed, sit down and talk to someone who's got the knowledge for international tax issues. If you're clean and you go, fine, give up your green card, make sure that, people have all the tax documentation so that later on, if they get a gift from you, if there are US people in the family, or they get an inheritance from you, they will be able to talk to the IRS and show the proof he was not a covered expat. I don't have to pay the 40% transfer tax. Be careful with, as we said, if you're working abroad and you want to use the treaty tiebreaker, if you're already at the 8 tax years, you've already done an expatriation when you use the treaty tiebreaker. And if you're at the airport trying to come in and they're giving you a hard time and ask you to sign a form I-407 because you haven't been meeting your residency as required, if you're at the 8 tax years, that's going to be an expatriation for you without any tax planning. So those are, I think, the major points to look out for people that you are assisting.
Yeah. I also just add to that, if you're an expat and an immigrant who came here mid-career with non-US assets and background, and you're paying someone $400 to do your 1040, or heaven forbid you're doing it yourself, there's other problems in there before we even get to this point. Right? You're doing that all wrong. Wow. Well, so much food for thought. Such an important topic, so misunderstood. I have several conversations of this every single year. I've stopped people from going home with a green card and putting it in their drawer. I've stopped people from going home and thinking they could just come back indefinitely. I hope this podcast...
Well, you've saved a lot of people then, Richard.
Well, and hopefully this podcast will reach many more. And I wish it was... This is naive of me, but I wish it was somehow mandatory that anyone who was going from a visa to green card somehow was given this podcast or your article or something that educated them on this is the regime you're entering into here. Do you really need this green card or not? Think about this. So
yes, and I have said the same thing, saying, when people naturalize as citizens, they ask them, so what's the longest river in the United States? I mean, these questions that, quite frankly, do not have any bearing on whether or not the person understands a very important aspect of life in America as a citizen, and that is our tax system. They don't understand, I have assets back home in, wherever country, and I don't need to worry about those because I didn't bring them to America. People will say to me, what can I bring, and not be taxed? And you're like, what do you mean bring? You're going to be taxed on everything you own, every income that you get, no matter where it's at. Really?
Yeah.
So
ask you one
it's a
final
rude
very
awakening.
important question. What is the longest river in the US?
I don't know.
Is it the Mississippi? I've done that naturalization test and I can't remember what the longest river is. We'll have to let up for next time because hopefully there will be next time.
You'll have to Google that, Richard.
Yes, of course. Oh, why spoil the surprise? Virginia, thank you so much for coming on again. I hope this is as I said before, I hope this is the second of many. You're a wealth of information. This is a super important topic. There's so many more for us to cover and thank you.
Oh, it's been a pleasure, and I look forward to our next one. We have so many great topics we can talk about.
We do. Just as I'll always ask, where can people find you?
Okay, so they can always go to my US tax blog, which again is www.us-tax.org. If they just Google my name, they'll find me. And I am a contributor on Forbes, so they can put in Forbes and my name and they'll find the articles. And I think we mentioned this in our other podcast, Richard, and I think it's very important for people that do have US tax issues. They need to find a reliable source of information. Because you and I have discussed, there's so much out there. People get confused. They don't know what to believe, what's correct, what's incorrect. And unfortunately, there's a lot of incorrect information out there. So I think get hooked on to somebody that is a good advisor and writes regularly, keeps you up to date. I think I'm one of those people that is very good at what I do and makes the information easily digestible. So people should consider, signing on to the blog and subscribing. It's free, or following me on Forbes. And they don't have to read everything, but they'll get something in their email. They'll at least see the title of the post, whatever it is. And that will clue them in. Oh, this is something I better read because I think I have this issue. There's so much information. There's an expectation that people do have a certain amount of knowledge or should be looking for things that are impacting them in the tax world.
Right, and if you want to understand how the IRS isn't going to accept, sorry, Gov, I didn't know, go and listen to our last podcast, episode 37, on reasonable cause and what is required to assert reasonable cause. And just saying, sorry, Gov, I didn't know, is unlikely to cut it. I would also just add to that, if I can, LinkedIn. So if everyone's active on LinkedIn, you can follow Virginia and you post your blogs regularly. So that's another way to have them
LinkedIn
kind of fed to you. So great. Well, thanks once again.
Was a pleasure. I look forward to the next one, Richard.
Excellent. See you soon. Thanks, Virginia.
Yep.
Bye.
Take care.
All right, folks, that's another episode of We're the Brits in America under our belts. Thank you for listening. I appreciate it, and I appreciate you. If you're enjoying the show and would like to support the mission, which is to help expats and immigrants thrive in America, I'd ask you to subscribe to the podcast wherever you listen, and also consider leaving a rating and a review. This stuff really does matter. Please help us get this information to the people who need it, i.e. your fellow expats and immigrants in America. Just a quick reminder that this show is brought to you by Plan First Wealth. We are a US-based cross-border financial planning and wealth management firm, and we help successful expatriates and first-generation immigrants and internationally minded Americans living across the US to make the most of their opportunity and ultimately to retire happier. If you'd like to know more about what we do for people like you, you can find us at our website, www.planfirstwealth.com, or you can look me up on LinkedIn. Do get in touch. We'd love to hear from you. As always, thank you to the podcast guys for their help producing this episode and the whole show. See you next time.